have Osiris here today. Osiris, would you like to introduce yourself and tell us what do you do?
Perfect. So my name is Osiris Bello. I basically do financial services. I got started actually, very, very young when I was like 18.
Oh, wow.
Yeah, and today I'm 30. So I've been in the industry for a little bit. And, but, more than anything, I started full time about, 5 years ago.
Okay.
I decided that, this was it.
Yeah.
And, I'm a Regional Vice President with a company called Primerica. And,
Okay.
that's pretty much, who I am. So.
Okay,
Yeah.
very well.
Yeah.
Could you tell us the company name again?
Primerica Financial Services.
Got it. Okay.
Yes.
Well, what inspired you to get into financial services?
Really good question.
Yeah.
Actually, when I was really young, I had a whole bunch of friends, that was in high school, and the reality was that, what ended up happening is that, my group of friends was the type of friends that would go out.
Okay.
And,
You're like...
they would like to have, parties and everything. I grew up with a very strict mom.
Okay.
So, the reality
we all have
was
strict moms.
right. And I'm thankful for that today.
Yeah.
But when I was young, I was not really, appreciative about that.
Yeah.
But just the reality that I got started with is because I actually had one of my friends at a 21-year-old passed away.
Oh.
She got into a car accident, and the reality is that there was no money.
Life's too short. Yeah.
Yeah, and life's too short.
Yeah.
You never know, right? Because she was healthy, she was young, right? And sometimes we think that only older people pass away, but the reality is that just changed my mind, because I was like, man, I'm 18, she was just
21.
2 to 3 years older than me. So I was like, wow, and the reality is that I saw the process of trying to get money, because see, what happened was that her mom was a single mom. My mom is a single mom. So I was like, oh my God, this is what would my mom go through if I were to pass away? Because, this was back in 2012. So
yeah,
there was no GoFundMe, there was nothing like that.
Right.
So we literally had to go out there and, kind of ask for money.
Yeah.
So that's the main reason why I got started, because I was like, man, there has to be a better way.
For sure.
There has to be some kind of way to either leave money. And honestly, at the time, I did not know anything about life insurance.
Okay.
It was never brought up to my attention. I didn't know that existed. So when I was 18 and somebody, at the time I was working at a newspaper, the Journal Sentinel.
Oh, really?
Yeah.
Okay.
And, one of my coworkers was like, hey, you're open to make, extra money. And I was like, sure, why not? And she was like, financial services. To me, that was very intimidating, because I was like, man, I'm not good at math.
Yeah, yeah.
So
I hear you.
That was the first thing that I thought about. And she was like, you'll be surprised. It has nothing to do with math, but it has to do with money. How to, save money, invest money, because, those two things are important. And when she said that, I was like, okay, sounds good. I have no idea what that is, but
they taught you, and
exactly.
Yeah.
I was like, the best way to learn something is to get involved.
Yeah, definitely. Just go right into it, do it yourself until you get better at it. Yeah, very well. Well, how did you develop your knowledge in so many diverse areas like wealth planning, investment, and home loans?
Really, really good question. Well, part of it is just the experience, meaning that I had to go out there.
Yeah.
And to be honest, Krina, it was like getting a bloody nose.
Oh.
Meaning that,
my God. Yeah.
I had to go out there and mess it up, because, we've been taught, since we're young, that failing is a bad thing.
Yes.
We always been taught that that way. But when it becomes, when it comes to business, it's totally different. It's like, you got to go out there and get a bloody nose, because you can only get so prepared. For sure. Right?
Yeah.
To a point that you think you're prepared, but the reality is that sometimes you run into people that you're like, oh yes, I was not prepared for that.
Exactly. Yeah.
So I just had to, slap it up and be like, you know what, I'm gonna fail, and that's okay.
Yeah.
However, if I do everything in my possible, in my whatever's in my hands,
right,
then I can.
You're gonna win. Yes.
Exactly.
It's just that, and any business is about all the ups and downs. You're gonna fail, you're gonna win, but as long as you know you're doing the thing, you're never gonna like you're gonna get there. Yes.
Yeah, exactly.
Well, what's the most rewarding part of your work, and what's the most challenging?
Oh man, that is a great question. The most rewarding, I think, is me being able to help somebody out.
Okay.
You know, with one of my services.
I hear you, because like in my realtor too, like that's the biggest part.
Yeah. You know, I get like satisfaction out of it. You know, because honestly, the reality is that I realize that people out there, they don't have a lot of knowledge. You know, and the reality is that sometimes they're either one, they're scared, they're afraid to, you know, go out there and ask, because, you know, you think like adults are pretty set, but as you adult, you're like, okay, maybe they're not as set as I thought.
Exactly.
Right?
Yeah.
So sometimes they're afraid to say, you know, be honest and be like, you know what, I just don't know.
Yeah,
you know,
like,
because
it's okay to accept that, yes, I don't know, I have that knowledge gap. That's why you are in this profession, I am in this profession. So we can educate our community and tell them, like, we are here to help you.
Exactly.
Am I correct?
Yeah, exactly. Okay. And you know, just like, for instance, I could buy my house. Right? I don't need the help of a realtor. But the reality is that you always want to go with a professional. You know, I'd rather do things the right way and not have any guesswork, and hire somebody like you to either sell my house or buy my next house. But most people, they think they can figure it out by themselves, but the reality, that's not true. Because see, what happens is that just like yourself and myself, we're gonna be spending pretty much, you know, well, for me, pretty much the rest of my life in this field. Therefore, I'm becoming a professional. Meaning that
we expertise in it.
Exactly. It's an expertise. It becomes an expertise. And although you think you might be able to do certain things by yourself, the reality is that you always want to connect with coaches and professionals, because the reality is that, you know, I'd rather save time than have a headache trying to figure it out and do it yourself.
You're wasting your time, you're wasting your energy, you're wasting your mental peace, money, resources,
all of that.
So not worth it. Hire a professional. Okay. What's the biggest mistake people make when it comes to wealth planning?
Oh, really good question. That is not getting into investing at a very young age.
Well, let's talk about me. Yes, I am a realtor and I'm in this business, but I do also lack the investing part in me. So like, what do you have advice and information on a younger entrepreneur in investing?
Really good question. So when it comes to investments or investing money, the longer you are in the market, meaning the more years you have, the younger you are, the less money you had to put in.
Okay.
Meaning that, for instance, when I started in financial services, I actually decided not to just get on board with the company, but I actually started with my life insurance, because I was like, man, if I pass away, I want my mom to be set. But second, I was like, man, I want to invest. And you know, and that's why I think I became a believer, because I started with $50 a month.
Okay.
$50 is nothing.
Yeah,
nothing at all. I mean, today you can't even go out
and
with
have
$50.
a 2-person dinner for $50.
Exactly. No, it's like you're spending $100 with drinks, food, dessert. You know, so I was like, okay, $50 is nothing. And here's the thing: when it comes to investing, you gotta create a habit.
Okay.
Investing is a habit. Most people, they think like, oh no, like I'll wait until I have the money so I can invest it or I can save it.
I do have that same mentality too. Like at some point I feel like, okay, I don't want to invest right now. You know, when I have more money, I'll invest at that point, or, you know, let me earn a little bit and then I'll invest it. But that never happens, because the more I earn, the more my expenses are, and it just never gets to that point. So I understand.
So if you make it a habit at an early age where, you know, the reality is that, you know, for instance, with us, the minimum that somebody can invest is $25.
Oh wow, that's it. That's your 2 Starbucks coffee.
Exactly, right? That's not even a week of Starbucks coffee.
No,
you know, me and my wife go to Starbucks, we spend $21.
Right there,
You know,
it's like
like a Danish and 2 drinks. That's it, right?
Yep, $25 right there.
So when I was like, okay, well, $50 in my head, I was like, okay, that's nothing. You know, I go and spend it with my friends, and my friends are not gonna be there for my retirement. So I start creating the habit
Okay.
of investing. And here's the thing. Over the years, the more I made, the more money I start putting, because I was like, okay, $50. Then the next year I start with 75.
Right.
Then the next year I start
100.
And then it turned out to be to a point that I was investing literally like $300.
Oh wow.
Because I was 18, right, living at my house.
Yeah.
My parents were paying bills. I had no responsibilities. So at the age of 24 years, in that investment account that I grew over the past 7 years, almost 8, I was able to pull money out of that account to, pretty much put a down payment in my house.
Oh wow.
And that made me become a believer on what I did, because, and it was not even about investing. It was just about making the habit of investing.
Right.
It's a habit. And most people think like we said earlier, let me wait until I have the money.
Yep.
But the reality is that, like, for instance, we're pretty much self-employed people. Right?
Yeah.
We're business owners. And here's the thing, as business owners and self-employees, we don't, have the chance to implement 401ks, things like that. And because of that reason, we get taxed at a different bracket, certain things, right? So when you invest money, there's also ways that you can save money on your taxes. So I teach, self-employees, and business owners also how to put plans. Instead of paying it to the IRS, and you could start establishing your retirement account.
Wow.
And you save money on your taxes, on your taxable income, and you're also saving money for you.
Wow.
So it's a win-win. But not a lot of people know about these things, because this is not something that teaches us in school.
I personally didn't know, so thank you so much for that information. It really helps. Tell us more. So you said you started saving like minimum as $25 a month. Like, does it go to a specific amount of a specific account of investment, or like does that account, like where there are certain types of accounts out there where if you put X amount of money, they put some X amount of money in it, and you can grow that money as well while investing? So is that something what you did, or was it different?
So basically, there's 2 types of accounts that you can get.
Okay.
One is a qualified plan.
Okay.
Meaning that falls under your IRS.
Okay.
That falls under your 401k.
Okay.
If you're self-employed, you could get a SEP account, right? A self-employed, account.
Okay.
Those are qualified accounts, meaning that whatever money you put in there, up to the limit that the IRS has, you can reduce that in your taxes. Meaning that, for instance, right now the limit is like, I believe it's 7,000.
Okay.
And that
per
was
year.
Yeah, per year.
Per year. Okay.
So you can literally, if you make $100,000, you could literally put $7,000 in that account, and you're not even taxed on it.
Wow.
That's not even counting, your deductions, your miles, all those things, right? So that's a qualified account. Then there's also non-qualified accounts, like CDs, mutual funds accounts, right? These are accounts that still earn you an interest rate. However, the big difference between those two is that a qualified account, you cannot touch it until you're 59 and a half.
Oh.
A non-qualified, you can touch it at any time.
Got it.
So in my case,
yeah,
I had a non-qualified account because, I was so young and I was like, well, I want to be able to touch this money. So I had a non-qualified account.
Okay. So that's why you were able to take it out for your down payment.
Exactly. Because because if you put a qualified account and you take out money, you get penalized and you get taxed on it. So, that's the big difference. So the thing about investing is that it really depends on the person's needs. And that's why you got to sit down with a professional like myself and kind of figure out what's your long-term goal, what's your short-term goal, because maybe that account that I put in place might not be suitable for you.
True.
Because we're in different positions.
Exactly.
So, that's where your goals come in, and, your financial goals, and that's where, so it really depends on the person, when it comes to, creating an account like that. But they're both beneficial, and they'll, at the end of the day, like I said, you spend that money either way.
Yeah.
We spend it.
Rather than invest it. And if you don't mind me asking, so when you started to invest when you were 18, did you ever had a thought that you were going to take that money out when you were going to be 24 for a home down payment?
That was not the plan.
Exactly. So that's my point here. Like, even if you're, trying to save a very minimum of $25 a month, and if you don't, let's say, plan on buying home for another couple or few years, and if you're really young, just saving $25 a month could get you a down payment in few years that you didn't even plan for. Like, that savings right there.
Exactly.
So that's amazing. Like,
money that you can have to do anything.
Right.
Because a lot of conversations that I have with younger people, like in their 20s and all that, they believe that it's hard to become a homeowner.
Right.
And they have that misconception, and I'm like, no, that's not true.
Exactly.
Like, that's just a myth, and of people that they never got prepared. And yeah, it's gonna take them a little bit to get prepared, but that doesn't mean you can't make it happen.
Right. Like, I bought my first home at the age of 21.
Wow.
So I understand where those younger people are coming from. And I wasn't a realtor at that time. Like, I was just a 9 to 5 working and other stuff. But I did it. So if I can do it, you can do it too. Yeah.
Yep. Yeah, exactly.
I'm just gonna check real quick if it's shooting or not. Yep, you're good.
Okay.
All right. Do you think life insurance are overrated or underrated?
They're underrated.
Okay.
100%.
Okay.
The way I look at it is that life insurance is the fastest and quickest way to create an estate.
An estate. Could you explain what estate means?
All you've learned is, meaning, like, if you were to, let's say for instance, if I were to pass away today, my house, my car, my savings, my investment account, my stocks, all of that's my estate.
Okay.
So when you purchase life insurance, you're literally buying money.
Wow.
Like, literally. And here's the thing, for instance.
Yeah.
I personally have a life insurance of $1 million.
Wow.
I don't pay $1 million for my life insurance, and neither I'm gonna pay ever $1 million for that life insurance.
Okay.
So I'm literally, in my case, I'm paying like a little bit over 120.
Okay.
Which in my opinion, for $1 million is not a lot.
Yeah.
Because if you think about it, we pay more for car insurance.
True. Yes, I pay about $310 per month on my car insurance. Yes.
So think about this. We protect our phone, right? Because we get insurance on our phone. We protect our car because we get insurance on our car. We protect our home.
There's insurance on everything now these days.
Yeah.
Like, literally, even rings. Like, rings have insurance.
Yep, exactly.
So it's insane.
Exactly. Now think about this.
Yeah.
We protect everything that is replaceable.
Yes.
However, people don't protect the most important thing, which is our lives.
Yeah,
That's
true.
why it's underrated, because the reality is that, one is the fastest way to create an estate, and two, it's affordable. And here's the thing, most people think like, well, I'm not old yet, I don't want to get it because I don't see myself passing away. Well, first of all, we're not
don't see it. Yeah, exactly.
we're never gonna know, right?
Yes.
So, but second of all, the cost of life insurance is based on two things: health and age. So the younger you are and the healthier you are, the more affordable it is. You know?
So even if you're healthy and if you be like, oh, I don't see myself passing, get it, because it's more affordable at that point. Like, again, as Forrest has said, that you're not God.
Yeah.
You can't predict you're gonna pass away or not. So
and the reality is that you're locking in something affordable at a younger age, so then that way in your older age you're protected, and you're paying. When I started with my life insurance, I was paying $30 for $250,000.
Oh wow!
Because I was 18.
Yeah.
But if you give that quote to let's say 60, 80 years old for $250,000, then I'll be paying 100 and something, $200. So which one would you like to pay? $200 and something or $30, which is $1 a day.
Wow.
$1 a day. Think about
life insurance. That. Yeah.
So
I believe there are misconceptions out there that is it okay? Let me ask this: is it true that, like, if you start now while you're younger, let's say if it's $30 a month, when you grow older or when you get more health risk, does that increase over time? The monthly payment?
Really good question. So it really depends on what kind of policy you have.
Oh, okay.
That's why it's so important to kind of check your contracts and all that thing.
That's why we have you.
Yeah, exactly.
Yes.
And that's why
Yep.
the professional comes in, because a lot of people, what they do is that, for instance, people go into the website and, I can go on there and get something.
Yeah.
Maybe it might be more affordable than what I have. It might be, something that looks good.
But there might be so many loopholes that you don't know about.
Yes.
Tomorrow you might just get like some stitches or I don't know whatever happens, and you have a bill of $100,000.
Yeah.
So you don't know those loopholes. That's why we have the professions that can help you go through them.
Yeah. Like, let me give you an example. I had a client recently that she had a life insurance policy for $500,000.
Okay.
And she was paying $50.
Okay.
To me, that's a red flag, because she's in her 30s.
Okay.
Right? And to her, everything's perfect. She's like, no, I'm good. This and that. And I was like, listen, I'm not telling you I'm gonna be able to improve it. However,
let me take a look.
Exactly. However, if there is a way to improve, wouldn't you be open to look into that? And she was like, oh yeah, I mean, only if I can improve.
Yeah.
Well, we found out that she had a policy that increases after a certain amount of years, meaning that she was paying $50 something, but in about 5 years, that policy was gonna turn into $170. So think about that.
Oh my God! It's not like $10 or $20 jump. It's like almost $150
three, 4
jump.
times. Yeah. So she was not aware of that, and the reality is that most of the time we don't even read our contracts. We just
sign wherever I have to. Yeah.
I did that when I bought my house. There's like the realtor's like, sign here, sign here. I'm like, okay, you know what I'm doing? I'm just gonna sign. But I had a professional, so I felt good about it.
Right, you trusted that professional.
Exactly. Yeah. But when people go out there and purchase something, it might be affordable, and you think you might have something, but it's always good to check. It's kind of like this. I always tell people that finances are kind of like health. And what I mean by that is like, you get a checkup every year with a doctor. Same thing with your finances. You should be having a checkup every single year, because your situation, your life changes. There's people that, start having kids, maybe you didn't have kids 2-3 years ago. So all those things and those barriers are important, because, your life changes.
Yeah, for sure.
Yeah.
Very well said.
Yeah.
Yeah. How do you convince skeptical clients that long-term investment are worth it?
Really good question. So, the reality is that when people are skeptical, it's just a lack of information.
Right, knowledge gap.
Yeah. So what I do is I educate them on how the market works. For instance, a lot of people, they're scared when the market goes down. Right? They're like, man, like, for instance, I had clients that they have 401ks, and they're like, well, you know what? I don't want to invest because, my 401k, I had a certain amount of money and it went down.
Yeah.
That amount dropped.
Yeah.
But here's the thing. The reality is that people make mistakes because that lack of information, they don't have enough information, and they make certain moves that they do lose money.
Okay.
What do I mean by that? See, for instance, the market works similar to everything. What do I mean by that? Like, for instance, think about this. When you buy a house, right?
Yeah.
Let's say, for instance, the house market.
Yeah.
Let's say I buy my house, right? And we know that the house market goes up, but also goes down, right?
Definitely.
It really depends, what year, right?
Yeah.
For instance, when I bought my house, it was a little bit under $100,000.
Okay.
However, today my house is $175,000.
Wow.
Right?
Yep.
Now, here's the thing. My house, I bought it 2018.
Yep.
Today the house is a little bit more. But here's the thing. If I buy my house at $100,000,
yes,
and I sell it at 175, do I have a gain?
Yes.
Yeah, right?
Yep.
It's called a unrealized gain.
Yes.
Meaning that, if I sell it, I'll make the gain. But if I don't sell it, it's not is still there, but really I didn't gain anything. I did, but I didn't, right?
Yes.
But let's say, for instance, let's say the next year, right? My house is from $100,000. Now my house is, let's say, just an example,
For
right?
example, yeah.
It went down all the way to 50,000. The market crashed. The house market, $50,000.
Yeah.
Now think about this. Did I really lose money?
Not really, because you stayed in it throughout all those years.
Exactly.
Yeah.
And here's the thing. When it comes to investments, people do this. They buy the shares at a certain price, and when the market goes down, they sell it.
Yes.
And just like a house, if I bought it at 100,000 and I sell it at 50, and I sell it, I lost $50,000.
Yeah.
And here's the thing, because I didn't have a professional to tell me, hey, Osiris, you know what? Don't worry. It's normal that the houses go down. Just wait until it goes up. You can sell it then. Yeah. Right? If I had your opinion, then I'm like, okay, cool. I feel good about it.
Right.
However, when people invest in the market, they do the same thing.
Okay.
It's exactly the same thing. They buy shares at a higher price, and when they see the market go down, instead of talking to somebody like myself or somebody that knows, they're just like, man, it's going down. Let me pull my money. Yeah. And that's why they have a loss.
Yes.
So that's why I explain to clients. I explain to clients how the market works, and I tell them this: you're not gonna retire next year, Mr. Klein. You are 45. Yeah. You're not gonna retire in 5 years. Yeah. Even if you wanted to, you don't have the money yet. Yeah. So it's not so important if the market goes up or down right now, but you gotta take advantage that when the market goes down, you're buying, shares at a discount price.
For sure.
So that's why, I educate them. So when it comes to, when they're skeptical and they don't know, it's just a lack of information.
Knowledge. Okay. Yeah. I completely understand. And it's the same in all businesses lately. Like even in real estate, people are just so skeptical getting that simple pre-approval, but they don't understand that's the first biggest step into buying a home. Yeah. So
they're not making any commitment yet.
Yes, it's just you need to know how much money you have before you go shop, right?
Exactly.
Like it doesn't make sense if you go shop and you don't know how much money you have.
Yeah, because what if you only have 100,000? You're looking at 500,000.
Exactly. Yes. So. Yeah. What's your opinion on financial independence, retire early moment? Is it practical or too idealistic?
So it really depends.
Okay.
It really depends because see, retirement, I don't know if you knew this, but retirement is not an age.
Correct.
It's an amount.
Yes.
Meaning that, like for instance, if I have $5 million today, I could retire. Yeah. Because my residuals of my investment will pay my income, So when it comes to retirement, right? Yeah. You gotta think of it like, what your income is. So, for those people that wanna retire early, you definitely gotta be making more than, what your income is. Yes. So it could be realistic, right? If you're talking about that you make $50,000 and you want to retire in 5 years and you never invested money in your life, that could be really realistic. Okay. But it could be realistic to somebody like, that started, like for instance, myself, I started at 18 years old, investing. And because of that, I got to see how the market worked. I got to see my money grow. And now I'm a believer that I should be investing for the rest of my life. And therefore, I'm longer in the market. Yeah. I'm invested longer period of time in the market. So therefore I can take advantage of the gains and the losses, because at the losses I'm buying at a discount, and the gains my money is growing. Yes. So it really depends, because I do know people that, they make the right choices, they get the right information, and they make the right kind of income, and they can retire early. It just really depends. And if you want to be one of those persons, you just gotta be out there for information. You can't be skeptical.
Exactly. Listen to the professionals.
Exactly.
Yes.
You cannot be skeptical. If you want to retire early, you cannot be skeptical. You gotta be able to take risks.
Yes.
That's the thing,
And everybody wants to retire early. Who doesn't want, right?
Yeah.
So please reach out to the professionals.
Yes.
Yeah. Do you think tax loopholes are ethical, or are they just smart financial planning?
Well, I believe that everybody has the same possibilities. So I think it's fair and square, because I believe that, and that's why it's so important to get the right information, because you could take advantage of those loopholes as well too. Not just, a lot of people had the misconception that only the rich people, and they must have some secrets. And,
exactly.
And it's
not true. That it's just about not being skeptical and going out there and getting that information. Exactly.
Because at the end of the day, see, the only, the other day, one of my mentors was saying, like, I mean, he didn't say it like in a wrong way. You can cut this out if it doesn't make sense.
Sure.
But he was like, he pretty much said, like, only broke people are skeptical. Rich people are not skeptical because they have to be able to take risks.
Yeah.
And then he was like, think about this. Broke people are scared because they don't have much money, and because they don't have much money, they try to protect that.
Okay.
So that's what they're skeptical, and I understand the logic behind it. However, if you really want to get ahead, if you really want to go out there and do something special with your life and become financially independent at a young age, you're gonna have to talk to the right people.
Yes.
And again, you're talking to professionals, not to your neighbor.
Right. Not Google.
Not Google, exactly. Because see, that's the thing. That's another thing. For instance, in my community, us Hispanics, man, if they hear it from the neighbor or their in-law, they'll believe it. Or even in Facebook, like, I saw this in Facebook. No, it's gonna happen. And I'm like, oh my God, like, and most of these people, you gotta understand that social media, most of these people, talking in about investments, especially, right? In the websites and in social media and TikTok and all that, most of those people are not licensed. Just so you know.
Yeah, they're not. Exactly.
They're not.
Yeah.
It's like imagine somebody giving you advice on a house and they're not even licensed to be a realtor.
Exactly. They're just there to make their videos go trending and make some money there.
Exactly.
It has nothing to do with your life or you taking advice from them.
Exactly.
Yeah.
Because I have a lot of clients that they go on social media and they're like, they hear things like infinite banking.
Yeah.
And this and that. And they believe it, but let me tell you something. When somebody like myself, I am FINRA registered.
Okay.
So that means that I have security license. And because I'm FINRA registered, even making this video, I cannot say certain things because it's not suitable for everybody.
Audience, yes.
Right? So there's certain advices that I cannot give because, I don't know who's watching this. So
true.
I could put my licenses, pretty
on
much.
Risk.
Exactly.
Yeah.
So you got to understand that these people that are
giving you advice,
blah, 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 they're not licensed. They got nothing to lose.
Yeah,
that's why they're out there giving advice like that, because they have nobody holding them accountable that what you're saying is true. Yep. They can say whatever.
Yep.
I cannot go out there and just say whatever because FINRA is looking at my profiles. They're looking at my, they're investigating me. Right?
Yeah.
So therefore, I cannot give any wrong advice, especially when it's to somebody that I don't know.
Exactly.
So you gotta be very careful. I always tell people this: buy and beware. Look at the person that you're looking, the advice for. For instance, if I had Krina come into my office, man, I'll take her serious. She looks like a professional. She's licensed, and I'll be like, okay, Krina, let's do business together. However, most of these people, they're at their house, laying down, giving you advice, and you're listening to it, so
and believing it so badly.
Believing it, and then you come to the professionals.
I'd be like, nope, you're wrong. No, the person who laid on their bed and said something is right.
Yeah, exactly. So you gotta really think about where you're getting your advice from, because anybody nowadays, with anybody can say anything, but the reality is that you want to talk to the right people that have been in the field, that are licensed, because you know that pretty much our behinds are in the line.
Yeah.
Yeah, that's what it is.
For sure.
So we're always gonna take the best advice that for you, because we don't want we don't want to get in trouble.
Exactly.
And we want to
like
help
our
you.
careers are on the line too. Like if we give you anything wrong info, any bad, whatnot, we are getting watched. Just how he mentioned, like our licenses are on the line, so we have no intention of giving anything wrong info to you. So,
yes. Yeah.
Is it better to save aggressively or enjoy life now and figure out retirement later?
Ooh, that would be a tough life. That'd be a tough life. When it comes, well, I guess like when you mean aggressively, meaning like saving a lot of money, or
at least a little bit. Let's say risk. Yeah.
Risk. Okay. Yes. Okay. So for instance, it goes down again. It goes down to the suitability thing.
Okay.
Meaning that it really depends on your situation, because see, what happens is that, let's say for instance, when I was 18, I could take a lot of risk. Like I was investing in aggressive funds, whether I lost money or not, I didn't really care, because and even until today, I don't really care, because I'm not gonna retire for the next 30 years.
Yeah.
However, for people that are a little bit older, it's a little bit harder to save money because you're older.
Yeah.
You have to do something like, it's kind of like a catch up. You gotta catch up on your retirement.
Right. Makes sense.
But you also gotta be careful how you invest your money, because now you're thinking like, okay, I'm gonna need it in 5 years or 2 years or 3 years. So now it's kind of like one of those things. It's an inverse relationship, meaning that the older you are, the less risk you can take, and because you can take less risk, the more money your money is gonna make.
Got it.
But if you're young, right, you have time. Whether your money loses, you still got time for the market to recuperate. Therefore, you have more time, and you can invest, longer term, and you're in the market a little bit longer. Therefore, you can retire probably with more money than a person that just waits all the way until the end.
Got it.
It's just like anything, if you have a trip, let's say for instance, right, you just went overseas to get married, right? If you had a trip and you don't have your passport, and you're trying to get it the last week, isn't it gonna be stressful?
It is, and to be honest, I'm not even gonna get it.
Right?
There is no way I'm getting a passport in 1 week to fly overseas. Yeah.
You're just gonna be like, forget about that trip.
Yeah, done.
So
forget retirement. Yes.
Exactly. So there's people that are old that they're just like, they give up. They're like, you know what, like, I'm gonna retire in a few years. So I'm just gonna, figure it out. But the reality is that, you have to save money. You have to, because Social Security is not enough. I have clients that, they get Social Security checks for $1,200. I'm like, man, that's rent.
Yeah.
That's just rent.
Right.
What happens with food?
Rent is also very hard to find for $1,200 these days.
Right. What happened to food? What happened to transportation? What happened to
medical, or
especially medical, because the older you get,
the more medical you
So
wow.
Yeah, so definitely it's a good idea to just get in the market early. The earlier you can, and again, you don't